Yeah. SBA, Giuseppe, is a small business administration. It's our government-backed entity supporting small business and entrepreneurship in the US, right? At the end of the day, these are just banks lending the money. What the SBA does is incentivize banks to lend to Michael, to Giuseppe, to anybody out there by guaranteeing a certain percentage of that loan. I talk to people all day, every day, and sometimes I ask, "Hey, why do you want to look at an SBA loan?" And they say, "Well, it's guaranteed." Yeah, while that's true, it's not guaranteed to the borrower. It's guaranteed by the bank that's lending it, right? So, I also get the question pretty frequently of, "Well, why do I need an SBA loan? Why can't I just get something, traditional or
Mhm.
conventional?" And the short answer is they're just harder to come by. Banks like to follow the SBA processing guidelines because they know at the end of the day, up to 75% of that loan can be guaranteed by the federal government, right? So the banks have protection knowing that they have the backing of the US government, right? If they do something conventional or traditional, that risk is entirely on them, right? So they like to follow this process because, again, it gives the banks a level of protection and this kind of a safety net, right? And, it's still a very popular way people get into business. All of these banks are very different in the types of loans they have appetites for, and those appetites change as they become, in different industries and different thresholds once they hit. So what Benetrends does is we partner with about 60 lenders across the country, and we take 45 years of experience, and we're going to walk a client through from pre-qualification to going directly to those lenders that we know love fitness, or we know love
Mm.
service based or health and wellness or quick food service, and then try to get the best potential rate that's out there for the client, right? Because these are government backed loans, though, just that the banks do have to follow specific guidelines and
Mhm.
criteria. So, if you don't mind, I'd love to kind of just give you the basis of what they
Yeah.
look for, right? They want to know that the individual's, just a outstanding, US citizen, right? Clean record, things like that. Then they look into the credit profile, usually anything from a 670 or above from a credit score perspective will qualify, and then the banks start to go through the numbers, right? So regardless of the investment range that a client may be looking at, typically what the banks would like to see come from the borrower is anywhere from 10 to 20% of that total investment come from them, right?
Mm.
That's going to be their skin in the game. And then the bank lends the remaining portion of the loan, right? The bank wants to know that, again, Joe or Mary Smith, have funds going towards the project.
Gotcha.
Other things the banks want to see is something we call post-closing liquidity. And real simple, Giuseppe, what that means is, hey, after I come to that table with 20%, do I have sufficient cash reserves and assets to continue to support my debt to income ratio and living expenses, right? They want to make sure somebody's not over
Mm.
leveraged just coming up with that 20%, right? So they're going to want to see a little bit of a runway, right? Sometimes the banks want personal collateral, not all the time, but as the investments get larger, sometimes the banks do wanna, see collateral. 9 times out of 10, that's gonna be a second position lien on a primary or investment property. Not always the case, it's always done on a lender decision, but those are the typical sort of requirements that the banks look for when lending money to an individual or a partners.
Getting approved for an SBA loan is a huge step, but what kind of business are you presenting to the bank? Lenders are looking for more than just a good credit score. They're looking for a fundable, recession proof business model. Understanding the loan is step one, but understanding what makes a business a smart investment is what gets you the yes. We break down the anatomy of a highly fundable business in the full franchise financing playbook, linked in the description below.